Namaskar and good morning. The Q2 FY21 result season is in full swing now. Today we'll take a look at HATSUN Agro Products Limited. HATSUN Agro is the largest private sector dairy company, largest in India. The company has their own infrastructure for milk collection and chilling, for procuring and handling of raw milk. It is the only company in India using back-to-fuse technology from Germany to clarify liquid milk. The product range includes Arun ice cream, make your own sundae, Arun unlimited milk products, HATSUN cooking butter, HATSUN cow ghee, HATSUN buttermilk, HATSUN curd, HATSUN paneer, several beverages like RO's milk, badam milk, RO's tea, masala tea, RO's coffee, RO's ragi and dairy ingredients and so on. They are introducing one after another. The management consists of K.S. Thanarajan, or probably Thangarajan, Chairman and Non-Executive Director, R.G. Chandramohan, Managing Director, C. Satyan, Executive Director. Now let's take a look at the quarterly results. Net sales are 1,327 crores in Q2. Previous quarter 1,279 crores, year ago quarter 1,279 crores. So there is an year-on-year growth of 3.79% and quarter-on-quarter growth of 3.73%. Year-on-year growth also 3.79%, quarter-on-quarter also 3.73%. Not great, but okay, some growth. This is COVID quarter, let us remember. Probably next quarter it may be slightly better, let us see. Now, net profit is 65.79 crores. Previous quarter 56.11 crores and year ago quarter just 25.24 crores. So compared to year ago quarter, the improvement is 160.7%. And quarter-on-quarter improvement is 17.25%. Net profit growth is impressive. Sales growth is not very impressive. Now equity is 16.17 crores. Basic EPS is 4.11. Here also year-on-year growth is 160%. Quarter-on-quarter growth is 17%. Market price currently is around 833. Market price is 833 and we have seen EPS is, quarterly EPS is 4.11. If you take them and calculate, the annual price earning comes to 50.67. 50.67 in my opinion is high. Volumes 35,000, not great, not big. Okay, but 52-week low is 377, high is 875. Current market price is very near to the 52-week high. So net profits are growth is good. Sales growth is lukewarm, not very great. Annual results, if you look at that, sales 5 years ago, March 2016 year, 3,444 crores. From there, it has been growing. Now it is 5,308 crores. I repeat, 5 years ago, the sales were 3,444 crores. Now, latest year, March 2020 year, 5,308. Not bad. Sales growth in the last 5 years has not been bad at all. Net profit, if you look at that, 5 years ago, 60 crores, March 2016. But March 2020, 112 crores. So net profit growth also is not very bad, but not very great. You can't classify it as a multi-bagger. Market depth is buy 57% and sell 43%. Balance sheet, if you look at the share capital 16 crores, reserves 888 crores. 5 years ago it was 219 crores. From there it has grown to 888 crores. Current liabilities have grown from 669 crores to 957 crores. Other liabilities, that is non-current liabilities, are 256 crores to 857 crores, 852 crores. So liabilities have increased, both current and non-current. Assets, fixed assets have grown from 679 crores to 2110 crores. Current assets are 468 crores to 498 crores. Current assets have not grown, current liabilities have grown. Other assets have grown from 9 crores to 105 crores. Nothing great, but other liabilities have grown from 256 crores to 852 crores. Like that. Cash flows, if you look at that, cash flows from operating activities has grown from 218 crores 5 years ago to 551 crores now. So cash flows have grown well. Investing activities, actually they are minus. This year also, last year they have invested 537 crores. They have got vast expansion programs. Financing activity is very less. So net cash flows is positive at 8 crores. Now book value has grown from 21 crores to 56 crores. Dividend per share is constant at 4 rupees per face value 1 rupee. Face value is 1 rupee. Dividend has always been maintained at 4, that is 400%. Gross profit margin is 10.52%, not bad. Operating profit margin 4.94, very low. Net profit margin 2.11, very low. So margins are not very great. Margins are positive but not great. Return on net worth has come down. 5 years ago it was 26, now it is 12.41. Return on net worth has come down by half. ROCE has grown from 12 to 14 or 15. Return on assets is approximately same. Earlier, 5 years ago it was 5, now it is 4%. Current ratio is 0.52, not bad. Not very great, but not bad. Debt equity ratio is 1.01, is okay. Debt equity ratio 1.01 is okay. Interest coverage ratio is 2.48%. That also is okay. Asset turnover ratio 195%. Asset turnover ratio should not be so high. 3-year CAGR on sales is 8.14%. 3-year CAGR on net profit is -6%. Okay, ratios are not very great. That much I can say. Now, historical prices, 3 years before the price was 705. Now 850 around that. So there is 20% growth, nothing great. 2 years before price was 628. So from there it has grown to 850, 35% growth, nothing great. 1 year before same. 3 months before same. 1 month before it was 857 and it is same now. 1 week before also same. So HATSUN Agro has not actually rewarded the investors in the marketplace by market price. Dividend they are giving, we have seen 400% dividend, all the 5 years they have given. Dividend is okay. Promoters hold equity 73.68. Earlier pledge was there 5.17%. It seems they have redeemed it. Now there is no pledge. So no pledge company now. But Q1 there was a pledge of 5.17. DIA sold 7.83, FIA sold 3.37. So cash flows are rising, that's a strength. Cash from operating activities are rising, that's also a strength. EPS is growing slowly, that's also okay. Net profit and net profit margins are quarter on quarter is good, but year on year, etc. is static. Revenue is increasing in the last 2 quarters. Increasing profits in the last 2 quarters. Earlier, not much growth. Strong cash generating ability is there. Now they are actually putting that money into a lot of investment activities. So decreased promoter pledge. FIIs are increasing their shareholding. Recent results are reasonably good. Weaknesses are growing costs for long-term projects. Lot of investments are going on. Mutual funds have decreased their shareholding last quarter. ROCE, etc. are declining. ROE is declining. That's a weakness. Resignation of top management. Somebody in the top management has resigned. That's a threat. High price earning, 50 plus, very high. Market cap is 13,500 and 746. Book value 56. So this is HATSUN Agro. The major weakness at present from the viewpoint of investors is very high price earning. Positive is they have got a lot of expansion schemes. They may, but expansion schemes, how long it will take for them to yield results, that we'll have to wait and see. When they come, revenue earning, then it will be good. HATSUN Agro is good, but it is not a multi-bagger sort of thing, unless the future expansions prove to be great. So till then you'll have to wait. I'll come up with a very good company very shortly. Thank you.